Okay guys, and welcome back to the channel. This is going to be a gold and silver market update, and it is Saturday the 20th of August 2016. So there's going to be a few articles that I'm going to start this video off with, and we will be going down a little bit of a rabbit hole with this first story. So bear with me as I go through this. Okay, so Venezuela's gold reserves tumble 25% amid economic crisis. And this is August the 18th, 2016. Decline in gold reserves, and this is from Bloomberg Markets. Decline in gold reserves surpasses earlier IMF estimates. Decline comes ahead of a bond payments due later this year. Venezuela's international gold reserves slumped 25% in the first half of the year as the country's foreign currency crisis deepens. The holdings fell to 7.5 billion in June from 10 billion at the end of last year, according to the financial statements published by the central bank this week on its website. The drop surpasses the 16% decline estimated by the International Monetary Fund. Venezuela's government has to find the funds to meet $928 million in bond payments later this year. While the state-owned oil company, Petróleos de Venezuela S.A., has $4.2 billion in debt coming due and interest payments, according to the data compiled by Bloomberg, officials have assured creditors they will honour debts despite growing discontent over shortages of essential items. A record low approval rating for President Nicolas Maduro. Venezuela's total foreign currency reserves, which include the gold holdings, dropped to 11.99 billion on August the 16th, from 17 billion the year earlier. The volume of the country's gold reserves fell 27% to 6.3 million troy ounces in June from the end of last year, central bank figures show. So guys, what's happening to Venezuela at the moment is they're having to turn over their gold as a last resort for paying back these debts that they owe to other nations. Now, I don't know if you guys remember the whole situation with Venezuela, but obviously the story's coming out via Dollar Vigilante and We Are Change about when they went down to Venezuela, and it's in a total collapse, free-fall mode. And there's huge political power plays going on over there with sell-off of state assets and overthrowing of governments and this and, complete pandemonium. Anyway, let me just give you a little recap of some previous history which people may have forgotten. So it all basically started from Chavez, and this article is again from Bloomberg, August the 18th, which is exactly 5 years ago. Chavez orders $11 billion worth of gold home as metal hits record. So this is Hugo Chavez, and you guys will recognize the name. Anyway, Venezuelan President Hugo Chavez ordered the central bank to repatriate $11 billion of gold reserves held in developed nations, institutions such as the Bank of England, as prices for the metal rise to a record. And as we know, in 2011, that is when metals hit their peaks, and Venezuela wanted their gold back, along with many other nations wanting their gold back. Venezuela, which holds 211 tons of its 365 tons of gold reserves in the US, European, Canadian and Swiss banks, will progressively return the bars to its central bank's vaults. Chavez said yesterday, JP Morgan Chase & Co., Barclays plc and Standard Chartered plc also hold Venezuelan gold, he said. Quote, "We've held 99 tons of gold at the Bank of England since 1980. I agree with bringing that home," end quote, Chavez said on a state television. Quote, "It's a healthy decision," end quote. Chavez, whose government depends on oil for 95% of its export revenue, is looking to diversify Venezuelan cash reserves from the US and European banks to include investments in emerging markets including Brazil, China, India, Russia, and South Africa. Now, guys, those few countries that I've just mentioned are the countries that are opposing the Western stranglehold. Now, this is just pure speculation, but I'm pretty sure that Chavez and the other leaders of these other nations will have got together and discussed about this gold backing that they're trying to introduce into the new monetary system that will be coming out the other side of this collapse. So the Western nations were forced to return Venezuelans' gold back to Venezuela in 2011. And we all know what happened to Chavez shortly after this repatriation. He was allegedly assassinated or died of natural causes. So we go into this three conspiracy article. Hugo Chavez was poisoned. The rumour that Chavez's tumour was the result of a foreign plot has been around since it was first admitted to the hospital in 2011. After Chavez's death, Maduro ramped up the rhetoric blaming the late president's demise on Venezuela, quote, historic enemies, end quote, i.e. the United States. Uncle Sam is having none of it. Quote, we completely reject the Venezuelan government's claims that the United States is involved in any type of conspiracy to destabilize the Venezuelan government, end quote, said State Department spokesman Patrick Ventrell, according to the Wall Street Journal. That didn't stop Maduro from expelling 2 US diplomats from the country shortly after assuming power. This particular conspiracy theory has at least one prominent believer outside of Venezuela. Bolivian President Evo Morales has said that he is, quote, almost certain, end quote, that Chavez was murdered, warning that the, quote, empire has all the instruments to plan actions to overthrow governments, leaders, social movements that are against capitalism, end quote, according to the Buenos Aires Herald. So that is the main theory regarding his demise. And I'll just quickly go over to this story, which is from the Paul Craig Roberts website, and you should go here and check it out because he's got a lot of interesting information. And I'll just briefly hint on this. Washington brings regime change to Venezuela. And this was posted on May the 2nd, 2016. According to President Obama, the world's only superpower, the unipower, the exceptional country, is threatened by small Venezuela in South America. In an executive order last year, renewed this year, President Obama declared Venezuela to be an, quote, unusual and extraordinary threat to the national security and foreign policy of the United States, end quote, and declared a, quote, national emergency, end quote, to counter the, quote, Venezuelan threat, end quote. You guys can go on to read a bit more about this if you'd like. But basically, the biggest threat to the American foreign policy would be a direct attack on the US dollar, which is its stranglehold on the global markets. And what would be a direct threat to this US dollar of infinite fiat dollar creation? Well, it would be a gold-backed currency, wouldn't it? So this is exactly why Venezuela wanted its gold back, so it could team up with China, Russia, India, and any other gold or silver backing currency that will be coming out the other side of this pending financial crash and collapse. So what actually happened is Venezuela got its money back, as in its gold, because gold is money, and the retaliation from the powers that be was to destabilize Venezuela. send it into complete turmoil. And if 95% of its revenue came in from the oil industry, and we all know what has happened to the oil industry, not only has it affected the Russian financial system, it has affected the Venezuelan even more because it is that much more dependent. So with them shutting down the value of oil and flooding the market, they basically capped the revenue that came into this country. And by doing so, made it extremely difficult for them to pay their debts. So the only other way of servicing these debts were with other forms of asset that they held. So it's really quite easy to see that the powers that be aren't going to rest until they've regained control of all this gold that they had to release back to Venezuela. And in doing so, they're probably going to try and instill puppet governments into Venezuela to maintain control. And there's talks they're doing this in Brazil. Anyway, guys, that's the little recap and theory on all that. So yeah, if they've had a 25% drop and they're down from whatever it was, 15 billion worth of gold, they're now down to 7.5. So the West have actually bled 50% of that gold back into the powers that be in the space of 5 years. And they're trying to send that as a message across to anybody else, including Gaddafi, who wanted to do a gold-backed dinar. This is the message to anybody that tries to do a gold-backed currency. We will come for you, we will destroy your nations, and we will take all of your wealth in the process. Now, I think it's going to be an interesting stance with obviously China, Russia, some Middle Eastern countries, because they've got more than enough firepower to defend themselves. But, as Paul Craig Roberts outlines, this is what would easily create a World War III scenario. And that could possibly happen. So moving on to Silver Doctors. US Mint halts Silver Eagle coin production due to lack of demand. The US Mint has reportedly halted production of 2016 American Eagles. Over the past 7 weeks, we have documented the plunge in Silver Eagle sales at the US Mint from approximately 1 million coins a week throughout the entire first half of 2016 to around 150,000 coins a week over the past month. The lack of Silver Eagle sales have reached a point where the US Mint has repeatedly just halted production entirely of 2016 Eagles. In a conversation with a VP who requested to remain anonymous of one of the US Mint authorised purchasers Friday, SD Bullion was informed that the US Mint has halted production of Silver Eagles. The AP estimates that the US Mint has built up a supply of at least 5 million Silver Eagles, with the sales this week of around 150,000 coins. For the third week in a row, the Mint has a decision to halt production entirely. The AP confirmed a market intelligence we have been sharing with the Metals and Markets listeners for weeks that the AP collectivity began working 4 to 6 weeks ago to reduce large Silver Eagle coin inventory, resulting in a cliff dive in sales at the US Mint. The VP that we spoke with advised that if the trend continues, he expects the US Mint to be stuck with a large inventory of 2016 coins at the end of the year, which means the Mint will likely force APs to purchase 2016 coins in 2017 to liquidate their stockpile. And yes, the US Mint has a strong precedent of strong arming the APs to take down inventory of backdated coins at the same pricing as CY coins if they wish to continue their relationship. This means the historically low premiums investors have enjoyed on Silver Eagles over the past several months will likely continue throughout the remainder of 2016, barring an unforeseen systemic market event. So Eric Sprott breaks down options expiration gold and silver smash. And guys, if you haven't done so already, go to Silver Doctors and just listen to this Sprott Money News Weekly wrap-up. It's only 30 minutes long. Moving over to this article, again by Silver Doctors. The Rothschilds are buying gold through their investment house RIT Capital Partners and Lord Jacob Rothschild is warning about the results of, quote, the greatest experiment in monetary policy in the history of the world, end quote. British investment bank Lord Jacob Rothschild is buying gold, pictured with Joanna Lumley. The Rothschilds' investment house has increased its allocation to gold by 8% and aggressively sold quoted equities and sterling to navigate choppy, quote, uncharted waters, end quote, post-Brexit. Sale of shares have been used to buy gold and other non-disclosed precious metals, which, at the end of June, accounted for 8% of the 2.8 billion portfolio, according to the Trust's half-year results, released on Tuesday. Quote, the 6 months under review have seen central bankers continuing what is surely the greatest experiment in monetary policy in the history of the world. We are therefore in uncharted waters, and it is impossible to predict the unintended consequences of a very low interest rate, with some 30% of global government debt and negative yields combined with quantitative easing on a massive scale. In times like these, preservation of capital in real terms continues to be as important as objective as any in the management of your company's assets, end quote. Rothschild said, to date, quantitative easing has successfully driven stock markets higher, but he rightfully fears this will not go on forever. He adds that a number of headwinds could also derail markets, including the very uncertain geopolitical risk. Geopolitical risks, quote, many of the risks which are underlined in my 2050 statement remain. Indeed, the geopolitical situation has deteriorated, with the UK having voted to leave the European Union. The presidential elections in the US in November is likely to be unusually fraught, while the situation in China remains opaque, and the slowing down of the economic growth will surely lead to problems, end quote, said Rothschild. Quote, conflict in the Middle East continues and is likely to be resolved for many years. We have already felt the consequences of this in France, Germany, and the US in terrorist attacks, end quote. As we have covered in recent months, the smart and prudent pension and institution money is aware of the real risks and new global financial crisis and continues to diversify into gold. And I can guarantee these guys have so much gold locked away in private vaults because they know it is a generational protection of wealth. Moving over to John Embry. Unfathomable prices for silver. Quote, banking system will ultimately require a reset, end quote. And guys, head over to the site and click play to find out more on this article. But he's anticipating that silver could reach $1,000. And this is not out of the realm of reason. But guys, do not value your gold and silver in today's fiat currencies. Because as I have responded to a comment as follows. I think this is the last dip before a move to $25 an ounce. And I replied, dips are nothing but a better buying opportunities in the currently massive manipulated market. Every day is a godsend to the buyer, for tomorrow's prices will not be reflected in today's fiat systems, but in a new paradigm where things will be priced against AG and AU. He who holds the gold makes the rules. You will be able to set your own price for trading it for what you desire, I believe. Fiat is not an asset. Everything else is the asset, and direct trade will occur, cutting out the middleman, which is fiat currencies. The best thing people can do is to ignore the pound, dollar, euro, yuan value of the precious metals and view them in their weights. I hope that kind of makes some sense for you guys. Because gold and silver are always what they are, gold and silver. They're not the items that fluctuate between the values. It's the currencies and fiats that are fluctuating around the metal value. And while we're in this huge suppression, it's not going to be reflective of what its real value is. But understand, it is historically trashed in value, and you are being able to get in to something which is an artificial value which will never be this value again on the other side of this system. Any money that you can spare and put into these metals today will catapult your net worth into realms you could only dream of on the other side of this event. And those of you that think this is ridiculous talk and don't understand that this is your opportunity that you only have once in your lifetime and quite possibly for the next few generations of your family, then you'll just have to sit on the sidelines and regret your decision in the near-term future. Alrighty, so finally into what has happened in the markets this week regarding the fiat flotation. So here we are, guys, at the close of play last week, where the currency valuation dropped from 1558 down to 1526, 1525 area. I stated that at the start of the week we would expect to see the rally come back out of that, because this was just a market manipulation move, and that's what's happened. However, obviously we cannot anticipate when the market is going to be smashed. It's generally going to be towards the end of the month, because that is when you got the short calls on the ETF exchanges and the contracts are having to be settled. So they're preempting that. So that is the reason we have seen this huge smash, which has actually been quite a decent smash, to be fair. And this will represent millions of ounces of silver being sold to create this type of drop. So guys, that smash from this week at 1548 down to 1477 represents a 4.58% drop in the value of silver in UK pounds, which all I can say represents, again, a fantastic buying opportunity. So what's happening in the gold market? So gold is actually holding up a little bit better. We take it down to the week view. So we can see we started the week at 1034 and we finished at 1026, which is an £8 drop, which is nothing. So they're obviously focusing heavy on this silver market, because we know that they can control the silver market a hell of a lot easier. And I'm sure we'll find out shortly regarding the paper contract markets what the exact figures are going to be in order to create these types of market swings. Now, flipping over to the US market, gold is actually up for the week. We had a start of 1336 and we're finishing at 1341. So the US dollar has lost some traction in the market this week. Nonetheless, the manipulation has taken its toll. Now over to the silver, we have an opposite reaction where it has finished below the weekly finish of the previous week from 1971, which, as we know, was above the $20 per ounce mark up until the close of play, which then saw it smash below that. It's all just pure manipulation, guys, and this is all just fantastic times to be getting in and building up your stacks, because this is the stuff that's really going to matter. Canadian dollar, huge smash, and gold also proven quite volatile during these times. Australian dollar is up from 1746 up to 1759, $13 up. Let's see what's going on in the silver. Surprise, surprise, huge smash. So guys, it's quite easy to see that they're just controlling that silver market, because we all know silver is the Achilles heel to this entire system. So I don't think I need to cover anything more on that. We're just it's just a rinse and repeat process. The valuations are kind of irrelevant, but I just know that you guys quite like to see what's happening, even though to me it's not so crucial, because I know the value is in the metal. The value is not in the price. The prices in silver get manipulated all the time. So guys, this is the Did the System Collapse website, which has updated its data systems. Now, you do have to pay for this if you want to view it yourself. I believe it was $15, and I do plan to obviously include this into my weekly gold and silver updates because it's got quite a lot of useful data which helps us see what's happening between the Western paper markets and the Eastern gold exchange. So we start off here in the UK pounds at the close of play, and on the left hand side is the Western markets, and on the right hand side is the Eastern markets. So we've got a £3.77 arbitrage difference between what the Eastern are buying and selling spot values at, and a 51 pence difference in the silver price. Silver is exchanging for £15.24, whereas in the West they've been smashed down to the 14.73. And this is quite a large arbitrage difference. And as I've said before, when you're talking about selling huge amounts of mined metals, are you going to want to be selling it at this price, or are you going to want to be selling it at this price? And when you're talking about 1 million ounces, just stick 6 zeros on the back end of that is what the difference in valuation is going to be on that sale price. And this is why the Western world can't compete against a fair market value, because it will come to a time where the West will be totally drained of all precious metals because the East are paying a higher price. So what's new on this website? Well, they've introduced a gold to crude oil ratio. They've introduced a gold to the Baltic dry ratio. They have introduced a 6, a 24, a 7-day, a 30-day, a 360-day analysis. And you can just switch between these settings and it will change the corresponding numbers on this side. So it's a really useful tool for seeing what's going on at a quick glance. Now, I'll probably end up using this site more than the other sites because this has all the information I need and I can click between currencies, and it even has a Bitcoin function. So let me just show you a quick rundown of the UK via the Dollar System Collapse website. So gold's highest this week was 1,052. In its lowest was 1,017. Silver's highest was 1,558 with a low of 1,462. Gold to crude oil was a ratio of 1 to 28. And gold to the Baltic dry index was 1 to 1.968. We can see the pound fell 0.92% to the dollar. And on the right hand side, this will be the Eastern valuations of the highs and lows, volatilities of gold and silver. And what you could do with this, which is quite cool, is just see the comparisons from one side to the other. Okay. Now things are obviously very tame at the minute because the Chinese aren't wanting to rock the boat too much in the West, but they're just letting the West know, hey guys, we're here and we're planning on whatever agenda it is that they have running in the background. And the West are obviously aware of this. So don't expect too much volatility between the two. As you can see, gold highest 1051, 1052, low 1023, 1017. But this is just the very start of the negotiation phase between the West and the East. China want gold to be the new backing. Russia want gold and silver to be their new backing. They will be introduced. They are just negotiating the terms on this arrangement. So when that happens, you'll see this right-hand side shoot up, quite possibly overnight, to many times the values that you see here now. And the West will have one option to either duplicate those figures or overnight this will collapse. and everything associated to those paper values will implode. So yeah, let's check out the Bitcoin, okay? So we've got the 7-day Bitcoin readings in regards to gold and silver. So the Western valuations are 1 ounce of gold will buy you 2.32 Bitcoins and 0.033, nothing to do with a Freemasonic order. And then we have gold, or could it be? And then we have gold on the right hand side at a slightly higher ratio, as we know, because it's valued slightly higher. So it's just an interesting thing to monitor, keep an eye on. And it also converts it down into crude oil and the Baltic Dry. So it really links and ties together really well. So when the market makes a rally imminently, we should expect to see some interesting figures on this site. So let's see what the advanced statistics say. Real-time and in-depth statistical analysis includes gold and silver spot price graphs for both East and West markets, gold and silver ratio graphs for both East and West markets, intra-market price differential between East and West markets, metal price statistics for each market, highest, lowest, average, and volatility according to the desired scope of time, relative price changes with percentages according to a desired scope of time, graphs for gold price against crude oil and Baltic Dry index to measure the relative performance of global trade in contrast with precious metals, graphs for gold price against Bitcoin and Ethereum to measure the performance of cryptocurrencies in contrast with precious metals, current and historical foreign exchange rates between 16 major currencies, read precious metal graphs, numerical statistics, relative price changes, and the live spot price in any of the 16 currencies. Advanced intergraph correlation tools allows you to make comparisons between all the graphs at a single instant of time within a data series. So guys, you can basically click on the charts anywhere through it and everything changes on the correlated charts. Really good website. So that's it, guys. That's the update. Thanks a lot for watching. Please do leave any comments and let me know what you think about this video. Can make any improvements. Okay, thanks for watching. See you on the next one.